Hi, I'm Becky and welcome back to Siren Crypto. In this video, we're going to be taking a look at the RSI or Relative Strength Index Oscillator and how we can use it in a couple of different ways to generate a potential trading signal. Firstly, here's our disclaimer. This tutorial is for educational and illustrative purposes only. We are not responsible for any investments made applying this information or buying or selling recommendations. Siren Crypto are not licensed investment advisors. We make no recommendations to purchase or sell any kind of coin, option or security. Any investment contains risk and is 100% the responsibility of the investor to assess the risks and rewards involved. Trading the crypto market involves a high degree of risk and you may incur financial losses if you engage in this activity. We at Siren Crypto take no liability, assumed or implied, from your application of the information we share within our training programs. The RSI or Relative Strength Index has been around since the late 1970s, so it's one of the more established oscillators. It's pretty simple and I'm all in favour of keeping stuff simple. So first of all, before we look at how it works in the real world, let's just go through the formula and how this thing is actually calculated. For those of you who are fans of the maths, here's the calculation for the RSI. The RSI is 100 minus 100 over 1 minus RS. So what is RS in this equation? Let me explain, as this really is the core of the RSI. RS is the average of X number of days up divided by X number of days down. Let's put that into plain language. Let's say we're using a 14-day RSI, so it looks over the last 14 days, how many days did the market finish up, and it adds the total points gained on those up days and divides it by 14. So we have an average of the points gained when the market goes up. And of course the inverse applies. If over the last 14 days the market went down for 4 of them, the number of points lost over those 4 days are added up and divided by 14, and we end up with an average. Average of X days up divided by average of X days down. Once this gets posted on the chart, we always have a value of between 0 and 100%. Now, there's no need to remember it. There's no test at the end. Most software will just produce this and put it on the chart automatically for you. Now, let's have a look at how it works in the real world, in the market, looking at overbought and oversold signals and how good or bad they might have been. So let's start with a nice clean chart. We're looking here at Bitcoin on a daily chart and we are adding here our RSI. We access the RSI from the Indicators tab at the top of the page and choose Relative Strength Index. It will automatically default to the textbook version of the 14-day RSI. And the overbought and oversold default to 70 and 30. And then that's it, that's the RSI plotted on your chart. So traditionally with the RSI, we always have a value between 0 and 100%. Anything above 70%, which is the top line, the market is said to be overbought. Anything below 30% at the bottom is the market is said to be oversold. So when the RSI stretches into overbought, here you can see the overbought signal, is a suggestion that maybe the strength has gone a little bit too far. If we go into the oversold signals, the strongest one we have is here. It's suggesting the market has gone down too far and is due a bounce back. It's not perfect, like all of these indicators, none are perfect, but it gives us a way of taking the temperature of the market. Okay, so let's change this to an hourly chart. The RSI is still there, but now rather than looking at the last 14 days, it's looking at the last 14 hours of price. So we have a much choppier RSI. If you change the period of the chart, then you're going to get different signals because you are looking at different price data. Okay, so let's go back to the daily chart on Bitcoin. It's the extremes if we are using overbought and oversold. People can be using the RSI to confirm their reading of the chart or the news or what the fundamentals are telling them. Looking to sell when the RSI is overbought and looking to buy when it approaches the dips or is oversold is just one strategy. However, because markets do move around and you do get quite a few overbought, oversold signals, and they may not be as reliable as another way of using the RSI, and that's looking at the idea of divergence. Don't forget, the RSI is just based on a calculation of what the market has been doing. It's not some magic formula, so it's based on what's going on in the market, broadly speaking. It will follow the market, but when it doesn't follow the market, that's when we can get different signals. So this is where we get divergence. So let's take a look at that, again, in the real world. The idea of divergence is a powerful one. Clearly, as markets move around, we get overbought and oversold signals. It's the nature of the market volatility. But these divergence signals are a lot less common, so arguably a bit more reliable. We have an example here. Now, they don't happen that often, like I said. The market slips lower, rallies, and slips again, so we have lower lows. But look at what the RSI is doing. It hits a low, the market bounces back, which drags the RSI up, hits a low again, but we have higher lows. So this is a suggestion, true as it turned out, that maybe this weakness is running out of steam. This is known as bullish divergence. So let's take a look at bearish divergence. This chart is for Ethereum on the 1 hour chart. We can see the usual overbought and oversold. So what I'm looking for is bearish divergence, where the market has pushed to a high and pushes a little bit higher. Let's look at what the RSI is doing. The RSI blips briefly into overbought, the market sells off, drags the RSI lower, but the market pushes higher, and then with the RSI we can see a lower high. So that's a suggestion that maybe the strength is running out of steam, and in this case it works out pretty well. So it's where the market pushes out to fresh highs but the RSI doesn't follow it. That's our bearish divergence setup. Bullish and bearish divergence is probably my favourite way of trading using the RSI. Those kind of signals don't occur very often, so you do have to be a little bit patient, which can be a problem for many of us. But it does give some obvious levels if we're going to be following these signals to put stops in. So let's talk about that. This is all about using the RSI to trade, and it's not about using it academically. We want to have an idea of where we shall get in and where we'll get out. The good thing about divergence, if we look at bullish divergence, is we have higher lows. So if we are buying because there is bullish divergence, we have a couple of obvious levels to place our stop loss beyond. By definition, if the divergence is going to work out, for example, the bullish divergence, the market shouldn't take out that prior extreme low. So we have a very sensible point to place the stop loss. So potential low risk, but a potential high reward for the trade. Well, that's it. That's the RSI. It's the most simple one out there when we come to oscillators. Now, there is no perfect system. There's no magic formula that's right all the time. I think the RSI is as good as any oscillator, particularly if you're looking at the idea of divergence. It does filter out so many of the normal choppy signals, so try it and see what you think. Now, here's a tip for you. I love anything that saves me time. If you think about the time that you spend trading, you can break it down into a few sections. The biggest section, I mean the one that consumes most of your precious time, will be technical analysis. By that I mean finding potential trades based on whatever strategy you want to employ. 100 Eyes gives us a supremely easy to use and very accurate tool for helping you find those trades and the qualifying conditions without you having to devote your attention to it. Instead of having to manually set hundreds of alerts on TradingView or flicking through countless charts, I just set a few easy parameters on the 100 Eyes platform and it does all that for me. This allows me to focus on the more rewarding parts of trading. The result is I make more trades. More trades means more potential profits. And that's what we want, isn't it? We are here to trade and make better profits. Now, 100 Eyes is not expensive to use and it just works. It will send you real-time alerts in Telegram. I've made a video all about using 100 Eyes. Just see the link below and start using it now and make your life so much easier. If you like this video, give us a thumbs up. Make sure you don't miss out on all of our videos by clicking the subscribe button. You'll get notified when our next lesson is uploaded. Well, I'm Becky. Thanks for watching Siren Crypto and I'll see you on the next video. Happy trading!